The market's closed. It's Thursday. This is the first day of war between Ukraine and Russia. We have to understand what's going on from a price chart, from a market's point of view, because your inbox is absolutely getting slammed right now with data information that is scaring the bejesus out of you and really probably having a lot of people make the wrong choices. And that would be a huge mistake. So I'm going to go over what's going on in the market, the world markets. I'm going to look at precious metals. I'm going to look at bonds, both international, domestic, emerging market. We are going to cover a lot of things in today's video. So we're going to move pretty fast. All things with the market in your portfolio and the stability of your portfolio in 2022. So stick around. Hey everybody, this is RC Peck with Fearless Wealth, and this is my weekly update. And wow, is there a lot to cover this week? There's a lot to cover just for today. I'm recording this on Thursday after the market has closed here in the United States. And wow, do we have a lot to cover. A lot of things are not happening that people thought would happen, and a lot of things are happening that people thought would never happen. How vague is that? But this matters. We have to look to the markets to tell us what to do, not to our own fears, not to what year we were born, not to what your big box financial advisor is telling you to do, but to look to the markets. So we have a lot to cover here. So stick around and let's get to this. So let me do this. Let me jump over to the price chart so we can get going here. And let's actually hold on here. I got to just correct something here just a little bit. Okay, so let me move over here so you can see those. All right, so let's start with the Russian stock market. Now, this is an index of the stock market of Russia. And over on the right side of the screen, you see that black line below where it was when COVID bottomed. So right now, the Russian stock market is down 60% from where it was in October, November of last year. So first thing is no one wants to be in Russian stocks. And this started falling way before the war. People started moving their money out of the Russian stock market way before today or yesterday. And this is what we typically see. The market collectively votes, this is not a place for my money anymore. And that's been going on with Russia. So this is the Russian stock market. And I want to start with this because here we are Thursday. And today the Russian stock market was down, its index was down 39%. So that's kind of a good framing to start with and say, okay, Russia's down, let's call it 40% just today. Okay, so the first thing that really we have to understand is Europe is going to take the hit the hardest. Just like Europe took the hit the hardest when the US and China had their trade war, Twitter, whatever, that started in 2018. I talked many times how it was actually Europe that was taking the biggest hit, not the US and not China. So this time around, Europe is going to take the biggest hit again. So let me just show you a couple of let me pull up a couple of the biggest European stock markets. So this is the German stock market right here, the DAX. And for the day, it was down 4%. Now, what's more important than it being down 4%, it really broke down. There was a really significant support resistance line that it absolutely broke down, not just today, but had broken down. And so Germany was looking pretty good. It actually made a new lifetime high. I don't actually know if that's a new lifetime high. Let me just quickly zoom out and see if that in fact was a new lifetime high. Yeah, so that's a new lifetime high. So it had just made a new lifetime high. And now it is down. And again, more importantly than how much it's down is that it is absolutely broken through support. Now, there was a double top, but the German stock market, I'm looking at the index here. So no currency issues here, is down 13.6%. Europe gets an incredible amount of their energy from Russia. Putin is no dummy. He has a long-term plan. He cannot get voted out of office. He knows that Europe needs his energy. And so it's a really interesting place for Europe to be in because on one hand, Ukraine needs to be protected by its neighbors. On the other hand, one of its neighbors who's attacking Ukraine is supplying them with a significant amount of their energy. So you see the DAX down in a big way. And then let's also look at, here's France here too, the CAC 40. The French index is down too. Again, they made a new lifetime high. Again, I'm not sure if it's a new lifetime high, but it's probably pretty close, if not, at the beginning of the year. So Europe was doing well. Europe was kind of moving ahead. And then all of a sudden they have a war on their continent that can spread pretty quickly. It can go sideways pretty quickly. Now, here is a trading symbol that is all of Europe, and it doesn't look well. So international markets have absolutely been hit the hardest. If we look at US domestic and international have been hit absolutely the hardest with the Russia-Ukraine, I'm just going to call it the war, the conflict. It's going to have many names over the next few days, weeks, months, and years. And so Europe is taking the biggest hit. And then obviously Russia is in Europe, but I'm separating Russia out because they are the attackers. Okay, so Europe getting hit hard very badly. Even emerging markets are down big time, 2%, though a lot less than Europe. They're still down significantly. Okay, here's what's really interesting. The S&P 500 up for the day. The war started, and the tens of millions, or hundreds of millions of people that vote around the world say, hey, you know what? U.S. stocks, not going to be a problem. The war over there is not going to be a problem. Let's not get into politics, why it should be a problem or should not be a problem, but the tens and hundreds of millions of people that vote say, you know what? U.S. stocks are the place to be. Even more so, you look at the NASDAQ 100, which has the famous symbol QQQ, and that symbol is up 3.36% just today. Now, let me zoom in a little bit and just to kind of show you what today was. So this is when the war officially started, and you can see, just sticking with SPY here, that's an ETF that tracks the S&P 500. The S&P was down as much as 2.7% for the day, totally rebounded, ended up 1.5%, and did a 4% move in one day. That's a huge reversal. It's like what we saw when we learned in 2016 that Trump won the election, that at first the future started down and then they immediately went up. And so that's what we're seeing here. The market's already discounting the war. At least the US market is already discounting the war in Europe, but not so much with, I don't think I can zoom in on a 1 hour to look at Germany, but here's a hedged ETF here for Germany, and you can see that it did not end above. This was the start of the day here. It fell and never recovered. And so Europe is absolutely taking the heat. You do not want to have exposure to international markets. I've done so much training on people being over diversified over the years, and here's another example where people are losing unnecessarily. So markets not hurting the US in general. There are parts of the market that are being hurt in the US, but generally speaking, the market is fine. Here's technology itself, actually up 3.4% for the day. So this intraday reversal is really the kind of the big impact of the day, and really understanding that you're not going to get that from news headlines. Okay, so U.S. domestic is still the place to be. Yes, the Qs are down more than the S&P this year, but the Qs also have a history. The NASDAQ 100 also has history of greatly outperforming the S&P 500. So that's a big piece of information right there. Okay, the second big piece of information is gold did not do what the world thought it was going to do. Now, I did a video last week called Gold 3000. I said, hey, it's worth a nibble. It's worth it to put, a toe in the water and get a position. But man, if gold can't go up when one country attacks another country, and you learn about the attacking country having piled up hundreds of billions of dollars worth of gold, one would believe gold would spike higher, but in fact, gold did not. And I'm zooming in here, and I'm using GLD because I can zoom in. Gold did the exact opposite. It popped on the open and then actually It popped on the open. It was up as much as, let's call it 2.5%. And then intraday, it fell. It fell 4%, settled a little bit. So there is some major whipsawing going on. Gold is not the place the world is moving. Gold is not the place the world is moving. Silver is not the place the world is moving. The world is still okay being in US stocks. It's less okay being in European stocks and international stocks and Asian stocks. Even GDX, which is a precious metal mining ETF. So this is kind of the equity division of precious metals. You're looking at the same thing. Those are called blow-off tops. Again, if there ever was a time for gold to start shooting higher, it would be now. One of the things I talked about last week is, looking at gold and being like, look, it's still in a downtrend. It is still going to frustrate the heck out of people. It's worth dipping your toe in, but that's about it right now because it has been very, very frustrating. And that's actually what we continue to see right now in gold and precious metals. Okay, now there was a couple interesting things. Wheat actually did pop. Wheat was actually the place people were moving. And it's because Ukraine and Russia produce a lot of wheat for Europe. So we actually saw kind of that, where's money flowing, where's speculation going, and it's in wheat. Now this is a ETF that tracks wheat, WEAT, but we're seeing it in wheat. Okay, and then we go look at West Texas Intermediate crude. Not really that much going on. If we were to zoom in and just look at an ETF that tracks oil, you'd see the same thing. So what we have here is there was a lot of thought that gold was going to skyrocket, that silver was going to skyrocket, that oil was going to skyrocket, and it didn't. Now the trend for oil, at least energy, is still up and to the right. Gold and silver are battling stability to have a breakout, but this was not the breakout that people were expecting. Again, trust the markets, not the headlines. Okay. I have one more thing I want to share with you. One thing that's really interesting, let's just quickly show you. This is the frontier market. And I'm surprised just how strong the frontier market has held up. So frontier markets are all the little countries that most people have never been to. Compare that with emerging markets, that is down 2%. Frontier markets are down less than half that. So there is an odd level of stability in frontier markets, which leads to the case, which I've talked about many times, that we are in a stock market correction. And I say that from a US point of view and an international point of view. Obviously, Russia is imploding. I'm sure Vladimir Putin does not have any of his money in the Russian stock market. I'm sure he has it in gold and who knows what else. But the market would not have fallen that hard if he had his own wealth in it. So he clearly does not care about the stock market. The one thing I do want to leave you with, and then I'll put a bow on this, is China. China is watching what the world is doing. China wants to invade Taiwan, occupy Taiwan, take back Taiwan, fill in the blank Taiwan. China will absolutely get Taiwan by the end of the decade. So they are watching how the world responds to Russia and Ukraine. Now, here's the thing. Russia sells a lot of energy to Europe. I don't know what the equivalent is of China. I know China's doing a lot of deals and having those deals be done in the renminbi. But Taiwan is a small country. Its biggest export from an economic point of view is semiconductors. Here's Taiwan Semiconductor company, not looking that good. It did a new high at the beginning of the year. As you can kind of see it, it was in this sideways channel. It's back in the channel. So back in the channel is not a big deal. But I think the really, really big news, and I don't really track news, I look at price charts, is really what China is noticing, what China is thinking. And I think what's going on right now is going to accelerate China taking over, occupying, going to war. with Taiwan. Okay, I said one more thing. I said that was the last thing. I just have to show one more thing here. With the NASDAQ 100 doing this huge reversal in a lot of other parts of the U.S. market, you have some companies that have been down a huge amount. Shopify was down a huge amount. You're seeing these reversals all over the place. PayPal, there's a reversal. Square, there's a huge reversal. C, which is actually based in Singapore, has done a reversal. Netflix has done a huge reversal. So we're seeing a lot of huge reversals. So what we know for sure right now is this is for sure a near-term bottom. Now, can it actually be the bottom of the correction? Absolutely, it can be. We need to wait for the Fed to come out and talk about their interest rates and balance sheet expansion, money printing, quantitative easing. And that's going to happen in March. That's what the attention, that's what the news cycle is going to move to soon enough once they figure out the Russian-Ukraine conflict, war, occupation is not taking down the stock market. Thanks so much, guys. I appreciate y'all being in my world. It's nice to kind of put a bow on things. U.S. market's still the most stable equity market on the planet. Gold, silver, precious metals, not the place people moved into. That was a huge head fake. There was a little movement into bonds, but that never took hold. So we are for sure in a short-term bottom, and we'll have to wait until the Fed comes out and speaks in March to see if, yes, in fact, we've fully digested all the information and the market has done its correction and we start moving higher. Thanks, guys, for being in my world. I appreciate you. I appreciate the comments. I appreciate the feedback. Let me know where I got it right, where I got it wrong. Did I say a term wrong? I do not mind being corrected. And if you like this video, you will love our other weekly updates and our Ask RCs. Thanks so much, and I will see you on the next video.